and welcome to this week's look back at the major stories to have impacted the markets so far. And this week we're going to have a look at UK GDP, which fell in December of last year. Now, the definition of a recession is GDP negative for 2 quarters in a row. Now, the previous quarter in the UK was negative, and a lot of people expected it to happen this time and for the UK to officially be in a recession. Now, as I said, December was negative. I think it was down 0.5%, but actually quarter 4 was pretty much flat. Thus, the UK narrowly avoided officially being in a recession. What does that mean? What's the outlook for the British pound? Well, it's still fairly bleak if you look at most of the key metrics and listen to most commentators. And if we look at the dynamics of volume in the markets and the fact that the price of the futures currently near the key resistance level of 1.24, what are we seeing? Well, the chart shows at point 1, we had high volumes which stopped the uptrend. That's generally been believed that was big player activity. And we move on to point 2, where we actually saw low volumes, suggesting a weakening in demand. Move that forward with the chart onto spot 3. You got high volumes against a falling price, which many say confirm that weak demand exists and there is a dominance of supply. If you look at those factors, then obviously it doesn't look great for the British pound. But does that harm, or will it in fact help the economy? That's something we're going to come on to in a second. Second up, we're going to have a look at the fact that the FTSE has reached an all-time high. Now, we've just spoken about GDP in the UK narrowly avoiding a recession, but not looking great for the pound. But this week, we've reached the key psychological level of 8,000. Now, that was on Wednesday, but it did fall back afterwards. Now, this morning, that's Thursday, we've powered through, and it's currently above 8,000. Although it has eased slightly off its highs earlier this morning. Now, I mentioned just now, a slightly weaker pound has actually helped because those stocks with earnings abroad, of which quite a few FTSE 100 constituents do, means that their cost is better. We have to take a look at a couple of recent announcements this week. British gas owner Centrica trebled its profits year on year. The bank Standard Chartered saw a 28% increase in its profits. And BP, British Petroleum, a massive player and driver of the FTSE, earlier this week said that it's doubled its profits year on year, mainly due to the higher gas prices due to the Russia-Ukraine conflict. So these more traditional, old-fashioned stocks, if you like, seem to be doing pretty well. Now, the chart shows that the index has been strengthening above 7,700 resistance line for some time. Now, that resistance line was in play for quite some years, to be honest with you. But that could now actually become a key support level. So whilst it's looking a bit gloomy for the pound, that does have some beneficial effects for the FTSE 100. Where it's going to go from here, well, nobody can be sure. But it's certainly nice to be talking about a high on the FTSE for once. Okay, we're now going to swap. We're going to have a little look at the crypto market and the fact the SEC, that's the US regulator, seems to be putting pressure on the crypto industry again. Now, the US regulator is making claims against the Kraken exchange, and that's the second largest in the US after Coinbase. Now, these relate to the staking service, which allows owners of crypto assets to receive a passive income. SEC Chairman Gary Gensler said earlier this week that offering staking is usually not accompanied by the proper information. There is no reliable way for an investor to know answers to some of these key investment questions. Now, is this a new SEC attack on the crypto industry? Quite possibly. Lots of people saying, or the speculation being, that the Kraken may leave the US jurisdiction. And this growing anxiety caused a bit of a fall in the Bitcoin price. If we look at the chart, the trend line one was broken by the bears after several bounces which quickly lost momentum. And at the point of earlier this week, all longs opened above 22,500 since January the 21st were in a losing position. Now, though, the last day or so, we've seen a bit of a rise. We're now well over the 24,000 mark. Now, there's talks of short squeezing going on, pushing the market up a little bit. Now, with those long positions that were losing money still in play, who knows? What will be the effect of this sort of new SEC action? Is it going to have a negative effect on Bitcoin? Well, this news has been around so far a week, and yet past couple of days, we've seen quite a big bounce. Yet again, the volatility of the crypto market strikes. So if you are involved in those sort of markets, don't forget your risk management techniques. Finally this week, we're going to take a look at an equity. And we're going to take a look at Apple, whose stocks are pretty high and flying in the face of the US tech drop. Now, the US tech-denominated indices have had a volatile time of it. There's no escaping from it. We've spoken about them quite a few times. And it's fair to say they're not keeping pace with the UK old-fashioned stock and the FTSE 100 that we've just spoken about. So is this a case of legacy industry versus avant-garde internet giants and EV startups? Well, it certainly seems to be that way a little bit. I mean, even Tesla, who we spoke about last week, doing pretty well after a period of decline, have suffered over the sort of 12, 18 months, though they are doing slightly better recently. But the start of the week saw 30-day highs for Apple, and it's still trading around the 154 to 155 mark now. But at the start of the week, it was up 12.7% on the previous 30 days. Why is Apple, obviously one of the largest tech giants, seeming to buck the trend? A couple of thoughts in process about that. Now, we mentioned the UK doing well because of, old-fashioned industry or, companies with products. Well, Apple obviously has that compared to some of the SPACs that we've seen. They do have a lineage of products. On top of this, Berkshire Hathaway increased their stake in Apple this week through the acquisition of a US insurance company, Allegheny. Now, in December, before this acquisition, they held 916 million shares, which equates about 5.8% of the company. Now, obviously, that stake's increased. It's quite clear Warren Buffett, who is known to be astute, obviously, and pretty prudent when it comes to these sort of things, is giving his backing to one of the most well-established tech stocks out there. That is generally deemed as a positive. So what's going to happen for Apple moving forwards? Will we still see the volatility or the reaction to declining other tech stocks? Well, nobody can be sure, but I think we go back to that point of serious backing from a major player, and we go back to the point of they have a line of solid products. Compare that to some of the SPACs, SPACs, that have listed without a product, raising tens upon tens and hundreds of millions of dollars. Shows you need a bit of substance to back things up. But we wish you luck with your trading in the week ahead, and we'll see you soon.